Okay, the market bounced around, went positive, negative, back to positive, ended up closing positive as we still potentially are forming that right shoulder on the head and shoulder patterns that I've talked about. The Dow was up 185 points, up 0.39%. S&P was up a quarter of a percent, up 16, almost 17 points. NASDAQ was up just over half a percent at 0.59%. The Russell was down 0.07%. And the VIX was down 3.77% to close just above 16 and a half. Now, tomorrow we have the private payroll data. It's supposed to be on the weaker side, 40,000. We're still waiting for the government to catch up on all the economic data after the government shutdown. And I want to continue to say, I believe the government shutdown was the final nail in the coffin for the economy. I think that will put us clearly into recession. We could see that impact the GDP for the fourth quarter. We had Powell speak overnight at Stanford. He didn't really move markets. The Fed chair chose not to address current economic conditions or monetary policy. It was a nothing burger for the market regarding Powell's speech. Again, we had another hoax going on that Powell's going to call an emergency meeting Monday night and he was going to resign. Oh, gee, that didn't happen. Another hoax. Absolutely incredible. And this is the same hoax that they were saying on social media a couple months ago, about 2 months ago. Maybe a little bit longer, but a few months back, they were saying the same nonsense. I posted a hoax alert on X regarding that because, again, it's a bunch of nonsense. But people love to believe the hoaxes. We are going to have the Fed next week. I think this is Powell's last public comments before the Fed meeting next week. And that announcement is next Wednesday. Ahead of that, 1 week here before that happens, we still have an 89% chance that, based on Fed fund futures, the betting markets, that the Fed will do a quarter point cut, which I think will likely be correct. We may get another hawkish cut as we did in October. The Fed gave us a cut of a quarter point, but well, we may not need to be doing more cuts in December and going forward. We've done 2 now to stabilize the labor market and all the rest of it that Powell said. Again, personally, I think they'll do another cut. If they don't, that would be extremely foolish. But they should already be slashing rates because recession is about to start. I think they do that by January. You'll see a down month in December, down in January, and I think at some point the Fed will panic in January if I'm wrong. And I have the guts to tell you what I think. Most people do not tell you what they think. But I tell you what I think before it happens. And if I'm wrong about January, then it's sometime in the first quarter, but I think it's going to be January. Bitcoin already collapsed. The stock market is going to play catch up. We're now convinced Bitcoin has bottomed, dropping 36%. If you want to see my latest Bitcoin video, you can watch it at the end of this one. And Bitcoin's getting, remember, the week before Thanksgiving, I predicted a counter-trend rally for both Bitcoin and the stock market, and that's what we're getting for both of them right now. It's done. Lower. I think it's already done with Bitcoin, but you can see my different Elliott wave counts in the video at the end of this one. Still think Bitcoin's in crash wave 3, by the way. We'll get that PCE inflation data on Friday delayed. It's a September report, so we'll see how that comes in. And on December 10th, we get that Fed announcement and the Fed rate decision and the press conference. It's just a couple of things. If you think everything is hunky-dory, you're drinking the Kool-Aid. The Fed just made another injection into the banks this week here, $13.5 billion. They've now ended the quantitative tightening. They're injecting all of this money into the banks. And you've got heard on social media, oh, QE has started. And again, they're injecting money into the banks, trying to stave off a banking crisis. They're doing it for a reason. It's quietly being done. People like me that pay attention to this stuff, but the majority of people walking the face of the planet don't know this is going on, don't pay attention to this stuff. We're likely starting to witness the tightening of lending standards, the The banks have huge exposure to the commercial real estate crisis, and this is going to eventually spill over into a banking crisis. People are in denial. You're going to hear more and more about this. I talked about, the Fed previously doing this weeks ago. Now they're still doing this. They're injecting money into the banks because there's a problem, not because everything's wonderful. Nothing to see here. The other thing in this article on Yahoo Finance is talking about MicroStrategy, and I just want to say this: MicroStrategy has huge exposure to Bitcoin, and they're changing some of the rules. MicroStrategy, which has huge exposure to Bitcoin, could be removed and create a bunch of forced selling. MicroStrategy would be a drag further down on Bitcoin. And I'll likely post something about this tomorrow. I already wrote it out over the weekend, but I haven't quite finished my research on all this. But MSCI considering removing Bitcoin. This is going to happen before or by January, mid-January. I think it's 14th. Bitcoin can be removed from the NASDAQ 100. Bitcoin. MicroStrategy is basically another way to trade Bitcoin. MicroStrategy already peaked and diverged with Bitcoin, marking a top a year ago, and it's got an Adam and Eve double top. I've talked about this in my Bitcoin videos. I'll link the latest one at the end of this video, but that puts further pressure on Bitcoin. Later here in December or going on into January, it can put pressure on the NASDAQ 100. It can put pressure on MSCI. And again, removing MicroStrategy from different indexes will create forced selling. So just something to be paying attention of, something to be aware of, like I've been talking about with all this stuff with the Fed injecting money into the banks. Remember, Bitcoin has already confirmed a bear market in the weekly and the monthly time frame on several indicators. I have a couple of different ways to confirm the bear market, and it's done it on several of them. The stock market will eventually play catch up to Bitcoin. This is one of the reasons why Bitcoin's bouncing back after dropping 7% yesterday, moving up off the lows, and it rebounded back up 6.5% today, likely getting the counter trend for wave 2. And if you want to see my L8 wave count on Bitcoin, you can see the video at the end of this one. But that's why we're rebounding back up right now. At least part of the reason, again, Fed injecting more money into the banking system. The crypto community believes, that is QE. Just stop quantitative tightening, QT. That doesn't mean that QE is starting. This is trying to stave off a banking crisis. Huge red flag for anybody that is paying attention to what's going on, which most people aren't. By the way, just quickly, Bitcoin is likely still in crash wave 3 with 1, 2, 3, 4 down, and it's likely getting the first 2 waves of intermediate wave 5. Address all this, and I tell you what happens, how the count changes if we go take out 93,000. But again, I think Bitcoin's going to drop into the Fed meeting in all likelihood, but I address what will happen if we go higher, that the counter trend wave 4 isn't done yet. The market's going to play catch up to Bitcoin. Through the 3 different possibilities with the L8 wave count if you want to watch my Bitcoin video at the end of this video. We still have this potential head and shoulders with NVIDIA, and again, maybe the right shoulders wrapping up here. We got the 20 below the 50 today on NVIDIA. The 10's already below the 50. The green line's a 50. The 10 is a red. The 20 is a blue. You got a bearish arrangement of the moving averages, and you got a topping tail on NVIDIA today in the form of a gravestone doji. We rallied up, and we stalled at the 50 period moving average as the 20 crossed below it, and we stalled at those 2 moving averages. If we end up breaking down, getting rejection at the cloud, getting rejection at the moving averages, the 50 and the 20, then I'll be watching, do we resume the sell-off and take out the 100 period? We got just below the 100 period, the pink line, and we rallied back up to the 50 and the 20 as we got the bearish realignment of the moving average trio. That's not good for NVIDIA. And I want to say one thing before I forget. You got the White House saying that they'll likely move forward with a land strike on Venezuela, and will likely happen within days. So if we see that happen this week or next week or something, that could rattle the markets. I don't know that it does. Again, sometimes these geopolitical issues Sometimes they freak markets out for the short term. Other times the markets ignore them. I have no idea, but it's something we should be aware of, something I've been monitoring. I wrote something about all of this today, explaining it. About 3 paragraphs. Could this trigger a stock market sell-off? Maybe. Just never know with these geopolitical issues. So we'll be watching. But they have huge amounts of oil. So again, we'll be watching. What does that do to the oil markets? Whether this impacts the market, I have no idea. It's just something worth paying attention to. Just like with NVIDIA, it's something to be paying attention to that we're getting a bearish arrangement of the moving averages, especially for NASDAQ, now that NVIDIA is doing that. I've talked about the gap up here, and again, we may not fill these gaps until a much later date. We don't know. We still have those potential head and shoulders on both NVIDIA and on NASDAQ. And now we've got a gravestone doji with today's rally filling. We're just barely above that 10 period resting on the 100 period moving average. We still have these really ugly divergences in the weekly time frame and the monthly time frame for NVIDIA here in the RSI, the MACD, and price oscillator, and they're just forming very similar to what we had at the last sell-off. NVIDIA peaked in late 2024. Similar divergences here in the weekly, here in the monthly time frame. So again, just things I'm paying attention to with NVIDIA as the 20 period crosses the 50 today, and we get rejection at that 50 period as the 20 crossed below it on NVIDIA. Please support the channel with the link directly below. Most YouTube channels have sponsors, sell you a bunch of stuff. I choose not to do that. They contact me all the time. I turn those offers down. I just want a direct relationship with you. So I just ask you could do what you can to help out in supporting the channel today. If you follow the link below to take you to a secured site, you could donate any amount you want or make it a recurring donation. If you do that, I thank you. But if you could take a moment to help out, I would really, really appreciate it. It would really, really be encouraging to hear from you. Thank you for your consideration for that. The VIX was down 3.77% today. It's got the bullish falling wedge. Tried to break out. Still maybe breaking out and kind of throwing back and back testing. We'll see what this looks like. It looks very similar to this. It looks very similar to the bullish falling wedges that have formed in the past. MACD went negative. Right here at the center line, last time we did that, it firmed up. And you got the volatility, and NASDAQ dropped 9%, S&P, and NASDAQ and S&P topped. NASDAQ dropped 9%, S&P dropped nearly 6%. We see something similar here as the stochastic is extremely oversold, and again, recycle back up. Now, again, the candles of indecision on the S&P 500, the dojis, are they continuation patterns or reversal patterns? If we go lower, this can be redrawn, the bullish falling wedge, and we get a push under the Bollinger Band here. Didn't do it over here. Didn't do it over here. Didn't do it over here. Still may do it. But these other wedge patterns didn't do it. So maybe we don't. Is there a catalyst that starts producing some type of sell-off? Again, remember, AI sell-off is still happening. I think the institutions went away for an extended vacation. They let the retail traders run it back up. I think they're going to sell into the rally again. They just let the retail investors run it back up so they can sell into the rally again. You're going to see that happen. Nevertheless, right now we do have the VIX still below the 50, but the 50 is inching closer and closer to the 200. If you push above it, you could get a bullish golden cross. It can give us a much, much bigger sell-off. NASDAQ 100 was up 213 points today, up 0.84%. We still have the 20 above the 50 here. NVIDIA got the crossover. Well, NVIDIA struggles. Apple's making new highs, and that's helped the NASDAQ. The NASDAQ, we slammed into major resistance back up here on October 29th. We dropped nearly 9% back to this low. I was warning you that would happen. We overthrew that level, and we bottomed out just ahead of the Thanksgiving week. I told you I was expecting a Thanksgiving rally. Bitcoin signals were suggesting that we were going to get a rally. The stock market signals were suggesting it. Even though we had these bearish engulfing candlesticks, I told you I didn't think those were going to play out. I thought we'd get the right shoulders, and I think that's what happened. I think that we'll end up seeing right shoulders develop and turn down. Now, I told you if I'm wrong about the S&P 500 having a head and shoulders, that we could see still a divergence like we did in 2022 with the S&P going and slamming back up into the trend line of resistance. In 2022, I showed you over the weekend, it went about just over 1.5% higher above the previous high. You could see something like that again. Personally, I don't think that's going to happen. I think you're going to get the head and shoulder patterns. That's what Bitcoin set up before it collapsed. So I think that the S&P and NASDAQ have likely both peaked, but I've still talked about these gaps up here. On the NASDAQ, we may fill that at a later date. We did fill this one right here today from back over here. This was back when we were rallying back up and the Dow made a new high, but the rest of the market did not. We were being told, well, the market is on its way to make new highs. And then we saw the big sell-off, and you now have the lower high and the lower low. You get another lower high here. We are going sideways. So again, we've come back and filled that gap from when we rallied back up and then saw the sharp sell-off after that rally. Remember, that's when the Dow got slammed into major resistance. All those warning signs, I went through it at the time. Everybody was telling us, oh, the Dow's so bullish. I told you it was camouflage to mask that we've been seeing the selling with tech, with the AI sell-off. You continue to see the selling pressure, and you're likely going to get it again here, or maybe at a little bit higher levels. But I think you got a good shot at this head and shoulders playing out. Again, I had another person tell me, oh no, the right shoulder can't go higher than the left. That qualifies it. Poppycock. I can go through and I can show you, and I've looked at thousands upon thousands upon thousands of charts, and I can show you lots of examples of an unbalanced pattern. Right shoulder is higher than the left, or you have slanted or rising head and shoulder patterns. That is just some analyst's interpretation of what the perfect head and shoulder should be. It doesn't mean that some analyst sets the rules for technical analysis patterns. These analysts tell us, oh, a 20% sell-off is the definition of a bear market. No, it's not. Your opinion of what a bear market is, your definition, not mine. In this bull market, you've had 4 times the S&P and NASDAQ have dropped more than 20%. Are every single one of those a bear market? Is the 2020 sell-off the shortest bear market in history, where we dropped 35% on the S&P in 3.5 weeks? It's a bunch of poppycock. So again, the head and shoulders is still in play. What disqualifies it is if we go and move above this high. Right shoulder moves higher than the head formation. That disqualifies the pattern. But just wanted to reaffirm that this is still in play, a head and shoulders pattern. But we didn't get the topic tail like we got on NVIDIA today, so I'll be watching to see what becomes of all of this with our rally. And again, I told you I thought we'd get the rally. We got it. I told you it might start selling off immediately when they come back, or it might go a little bit longer. I think you're still going to get this right shoulder playing out. The S&P got another candle of indecision in the form of a doji. This tells us we're either consolidating to go higher, or you're getting these as candles of indecision that will eventually take us lower. Either a continuation pattern or a reversal pattern. You got doji yesterday, but it was not confirmed. You get another doji today. So you've got back-to-back dojis, candles of indecision after our rally on very, very light volume. You can still have the head and shoulders pattern. Again, the right shoulder higher than the left. The risk is that we end up seeing what happened in 2022 happen again, where NASDAQ goes back and tries to fill the gap, gets a lower high, and S&P still tries to go higher. I don't personally believe that's going to happen, but it could. So I want to make you aware of that. And by the way, we had the gap yesterday. We had the gap yesterday at 68.49. We filled that. And we filled the one up here from over here. And I got this wrong. I had marked it 68.52. I was off by a point. It was actually, I rounded up. And rather than rounding up to 68.51, I rounded up to 68.52 by accident. And we actually filled that gap today. It was at 68.51 rounding up. And we did fill that gap today ever so slightly. So that gap is now filled. We still have one unfilled gap up here from the top where we gapped lower. This gap may get filled or it may get filled at a later date, but there's at 68.92. Are the dojis a continuation or are they a reversal? The 10 is below the 50, but the 20 is still above it. The 10 has been curling higher with our rally on lighter volume from Thanksgiving week. Stochastics are now coming up to extremes. I'll be watching to see if they roll over. Do we get a lower high here? Does something start triggering a sell-off this week ahead of the Fed? Does a rally continue and we sell off with the Fed? Which, again, the Fed meetings, we have been selling off with Bitcoin on the last two meetings, and our last meeting we sold off with the stock market. This top right over here, that marked the top over here, the top so far on the S&P and NASDAQ on October 29th. Now the S&P 500, the S&P 500 is going sideways. Let me just go back to the 5-minute chart so you can see it. The 5-minute chart is showing we had the gap lower on Monday. We went up. We went towards the gap fill but couldn't reach it. We formed a rising wedge and we turned back down. That gave us the doji on Monday. We gapped higher for the session here. We actually went up and filled the gap from Monday, and then we filled that gap at 68.51 that I'm showing you in this video, and we turned back down and we just chopped. Saw some choppiness back and forth. So that's giving us these dojis. Are the dojis continuation patterns or reversal patterns? And that's a $64,000 question. The 15-minute chart, we had that divergence there, turned down, and now we're going sideways. Very similar to what we had here. We had a peak, turned down, we went sideways. Had a peak, turned down, went sideways at this lower high. This is the gap right here that we just filled today at 68.51. This gap right there. You can see it on the 15-minute chart there. So, and the gap from yesterday at 68.49. So is this a continuation and we go higher, or is it one of these where you see a peak and then you go sideways and you drop? See a peak, go sideways and you drop. Is it going to continue that same pattern? It does, and you have that right shoulder potentially in play. Was a 15-minute chart. Here is the 60-minute chart once again, and again the gap fill from yesterday and the gap fill from back over here, 68, and I still have it marked as 68.52. It's 68.51. Apologize for not getting that. I try to get it close, but sometimes make mistakes, or even sometimes on spelling. He recently caught me spelling Bitcoin wrong on one of my charts. He called me out on it. He was right to do that. Plus, I digress again. Again, do we have a right shoulder, or do we try to go up and fill the gap at 68.92 and end up diverging with NASDAQ? You've got a divergence here. You saw that peak. Now we're just drifting sideways like we did back over here, like we did back over here. So we'll see what happens. The 50 is moving up to the 200, but has not yet crossed above it. If we start to sell off, do we drop back below those moving averages and drop into the cloud or below it and go back here and get the right shoulder? Do we see what happened in 2022 happen again? Going sideways. So again, signals went from bullish to bearish to bullish to bearish back to bullish. We're going sideways. So they're just going back and forth. If we turn down here, we could have back tests of the trend lines from these lows over here. We got rejection when we back tested this trend line and dropped to new lows. Do we see something similar to that and drop towards our 200 period moving average? Same thing here for the NASDAQ 100. Again, we're back testing the red trend line. We already did the black one here at the rising wedge. Broke down. We back tested it immediately with that big red bar and got rejection. And now we're doing it again, forming a potential right shoulder. Forget, we got those hanging man candlesticks. We got the hanging man candlesticks in the monthly time frame to close out the month of November. Here it is on the NASDAQ. Can these hanging man candlesticks produce a reversal as the hammers did back in April? It is on the S&P monthly chart again, our hanging man candlestick. Means we'd have to confirm it by the end of December by closing below the November low. And here's a 60-minute chart of the NASDAQ. Again, you still have the potential right shoulder. If we get a bigger rally with NASDAQ to come back and try to fill the gap up here, right here, then again, you might see the S&P and the NASDAQ diverge, and we might have a similar situation to 2022, as I talked about over the weekend and talked about yesterday. I don't know that that will be the case, but it is a possibility if NASDAQ and NVIDIA try to rally. Right now, NVIDIA is getting the bearish alignment of the moving averages. NASDAQ doesn't have that yet. We'll see what happens. We got the divergence right here in the 60-minute time frame. We got a divergence right here. S&P already had one on the 60-minute chart. Watching, do we end up rolling over and getting the right shoulder, or do we got to go higher and fill these gaps? I'm watching the gaps that filled today on the S&P. Is that all she wrote? Does this gap get filled at a later date, or do we try to do it right here, right now? But if NASDAQ does start to sell off, the 20 might drop below the 50 and join NVIDIA, getting a bearish alignment of the moving average trio, the 10, the 20, and the 50 period moving average. I call them the moving average trio.